Three high quality dividend stocks to buy before November. With so many different stocks, especially high quality ones, now being on sale, and with starting dividend yields being in the 3, 4, or even 5%, it's hard to allow your cash balance to stretch as far as you and I would want it to because there's so many deals across the market. But in this video, we're going to be going through three different high quality dividend growth stocks, which I would consider extremely high quality, meaning they're not only offering potential growth ahead, but they're also offering a nice starting dividend yield with a nice amount of dividend safety. Now stick around, drop a like down below, and let's get into the very first stock. Now the first stock that's on sale and that's offering potential growth ahead and a nice steady dividend is Clorox or CLX, offering a 3.9% starting forward dividend yield, which is the highest it's been over the last 5 or so years. Not to mention Clorox has a 70 on the dividend safety score, making it relatively very safe. Now, even though Clorox is currently trading towards the lower end of the 52-week range at around $120 per share, 119 being the 52-week low and 178 being the high. So Clorox stock is no stranger to trading at around $200 or $200+ per share, so there is massive growth potential here. Now, what's also crazy is that Clorox is now trading well below what it even hit back in 2020. And with a lot of the recent trading across the board, a lot of these dividend king stocks have been beat up like crazy, which is giving long-term dividend growth investors like you and I a potential chance to lock in some massive starting yields, which once again, we only have a few chances, or have only had a few chances historically speaking. Not to say that Clorox or any of these names are not going to trade lower from here, but just looking at the chart, there's only been a few times, at least over the last 5 or so years, where you've even been able to buy Clorox at a 3% plus starting yield. Now, Clorox year to date is down around 14%, so it is down quite a bit. And over the last 5 years, Clorox has been trading down and down and down. But with all this recent pain, Clorox is offering, like I said, a 3.9 or 3.92% starting forward dividend yield, which is offering a nice amount of cash flow for investors that are buying into Clorox mostly for growth potential. But keep in mind, cash flow also is helpful. Also important, there's 45 years dividend growth and a streak of dividend payouts that is much older than I am. Looking at Clorox dividend payments consistently over the past 20 or so years, they have a nice steady cadence of raising the dividend about once per year. And to give you an idea of how much dividend growth Clorox has had, for example, in 2014, this stock was paying around 71 cents per share per quarter, and now paying around $1.20, almost doubling the dividend in the last 10 or so years. So is Clorox specifically going to see more pain from here? Could we see Clorox break $100 per share? Of course, anything's possible, but this one is definitely on my radar and should definitely be on your watch list. The next stock that's definitely on sale right now, offering the highest yield it has offered in the past 5+ years, is BristolMyers, which is offering a 4.04% starting dividend, and on top of that has a 79 on the dividend safety score, making the dividend very safe. Now, BMY, Bristol-Myers, is another blue chip high quality dividend king that is for whatever reason on sale quite a bit, trading basically at a 52-week range low as I'm making this video. Now, Bristol-Myers is down around 21% year to date, pretty much in line with most of the other dividend kings that have been recently beat up, but on the max time frame up around 297%, not including dividends, and this stock just as of recently was trading at over $80 per share. Now, with the recent share price performance, Bristol-Myers is yielding around a 4.04% starting forward dividend yield. And I think a lot of us are sort of jaded to these massive starting dividend yields for some of these dividend kings because, of course, right now treasury bonds are offering, 5-6%. CDs are offering about the same. I know it's kind of crazy that as of right now, we're so used to higher than normal yields, but I promise you just a few years back, a 4% starting yield for a dividend king like Bristol-Myers, for example, would have definitely got any one of us excited, but I think we're all just a little bit jaded to high yields as of right now. But of course, Bristol-Myers does pay a dividend every single quarter, and just like most of the other dividend kings, raises their dividend pretty consistently on a year or so basis. For example, the recent dividend raise from 54 cents to 57 cents happened just a few quarters back. Now, also important to note, back in 2014, around 10 years ago, Bristol-Myers was offering around 36 cents per share per quarter, now offering almost 60 cents per share per quarter. So once again, a nice healthy amount of dividend growth. Not to mention when it comes to some of these massive companies, these blue chip names, the dividends are most likely going to be somewhat secondary, at least until yield on cost gets up there, because the growth potential could be there, especially with something like BMY. Now, the final stock that's definitely on sale, I had to do it. This is one of my favorites. This is one of my largest holdings as of right now. Is ticker symbol O, or Realty Income, offering a 6.07% starting dividend yield and offering a 80 on the dividend safety score, making Realty Income's dividend just about as safe as it gets. Now, like I said, Realty Income is definitely my baby, and it's been beat up quite a bit, but I've just been buying more shares, averaging down for the long term. Realty Income is down around 20.71% just year to date. But because of interest rates, pretty much everything and anything exposed to real estate has of course felt some pain for the most part. But on the max time frame, let's zoom out a little bit. When in doubt, zoom out. Realty Income is up 535%, and that's not even including dividends. Now, Realty Income is also trading pretty much right at the 52-week range low, and I've personally been buying more shares of Realty Income basically on a daily basis. On red days, I'll go a little bit deeper, but I'm buying Realty Income for the long haul because for me personally, I want something that's going to be offering a nice starting dividend yield, also have dividend growth, and a very, very strong fundamental business. Now, Realty Income is currently paying around $3.07 per year, which is around a 6.07% forward starting dividend yield with 25 years dividend growth. And of course, we all know the story when it comes to Realty Income. Realty Income has paid dividends on a monthly basis and has continued to pay more and more, pretty much every single quarter, more or less. For example, when I first started buying Realty Income back in, say, 2017, Realty Income was paying around 20 cents per share per month. And as of right now, Realty Income is paying just shy of 26 cents per share per month. So the dividend growth is definitely there, but it's not necessarily even that important when Realty Income is already yielding around 6% and has some massive upside potential. Because if you ask me, I personally believe that Realty Income will be trading back up towards $70 if and when interest rates get cut over the next year or so. But until then, there might be some more pain ahead when it comes to Realty Income. So there we have it. Those are 3 high-quality dividend growth stocks that are currently, in my opinion, either on sale, and if not, close to being on sale at that. Now, like I said at the top of the video, as a dividend growth investor with a long time frame ahead of himself, it's really hard to know what to buy because there are so many dividend kings that are on sale offering above 3.5 to 4.5% at that, which makes a lot of these names very, very tempting. Now, some of, if not all of the stocks we went through in today's video would be considered dividend kings in my opinion. Now, a dividend king is a special classification of a stock that signifies a company with a long history of consistently increasing its dividend payments to shareholders. And for a stock to be considered a dividend king, this stock is going to need to have things like dividend consistency, which every single stock that we went through in this video definitely has. Also things like dividend growth, paying more and more in dividends over the long term, which they also have. Dividend stability, or a healthy, safe dividend safety score. Now, investing in dividend kings, especially when they're beat up in share price, is a great opportunity to get into a position and of course allow your cash balance to stretch much further. With that being said, of course, as always, do your own research and your own DD. And of course, I hope that some of the stocks that we went over in this video were helpful for you. But I want to hear from you guys down below when it comes to some really high quality dividend growth names, especially dividend kings, companies that have been paying and raising dividends over the past 10 plus years. What are some stocks, some tickers that we need to look into ASAP? Please leave them in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.